Is there anything which is standing out for you as a red flag or a risk in the current market setup? And in case yes, then what would that be? What should investors be careful of as we move forward from here within the markets?
Sure. Couple of not red flags, I would say, but things to monitor. One is there is very good signs. There are very good signs that the U.S. economy is slowing down. So if you look at the job openings number, if you look at some of the credit card delinquencies, existing home sales, new home sales number, things are turning down, right? So that's one overhang that we need to keep a tab on, because that will import exports, and that will impact exports and of course the global economy. So that's one thing that certainly we are looking at. Second thing that I observed is that the first quarter earnings, the June quarter earnings, were not that great for India. So if you look at the top 1,500 stocks, the overall earnings growth was like low single digit after a long time. So the benefit that we had over the previous few quarters was that of margin expansion, which is now no longer there because it's come normalized. So now we need the top line to grow, because you're not going to have the benefit of margin expansion. There, the call is that the consumption theme will now carry on the rest of the year, and then in the next couple of quarters after the in the festive season and after the monsoon, we should see a beginning of the consumption pickup. So that's one thing to look out for. That consumption needs to pick up now because it's been a drag for so long. Private sector investments, is the jury is still out. There is green shoots, and hopefully these green shoots should accelerate, because very simply put, without private sector capex and private sector investments, both in housing and infrastructure and manufacturing capacities, I don't think we are in a position to grow at the 7%. Without private sector investments picking up, including real estate and housing, I think we can grow at maybe 5 to 6%. That extra 1% has to come from investments link. So that is something that we need to keep a close watch on. What we have also seen as I would say again, a watch point is that in the last few months, we've seen state governments rolling out freebies and cutting on capital expenditure. So in the first 4 months of the year, the state governments have probably rolled out freebies of 60, 70, 80,000 crores, all states put together. And the capex in the first 4 months is down by 20,000 crores at the state level. So that we need to see whether that slowdown in capex was just because of election linked activities. Typically there is a pause during the election times. Hopefully in the second half it should pick up. So that's something that I would also keep a close eye on.